Welcome back to Market on Close. Just a few minutes left in the trading day here. It's time for the big picture. Let's welcome in the team from Charles Schwab. Joe Mazzola, head of trading derivatives strategist at Charles Schwab. Thanks so much for your time today, Joe. So, it's really fascinating. Obviously, the question of the Fed independence is back in the spotlight. Equities seem to be taking it in their stride today. I'm just seeing, as we speak, we are seeing some commentary coming through as far as the headlines are concerned about the Fed actually responding to this. It's going to be very interesting to see what they have to say. But the markets have spoken. I mean, we've seen that steepening in the yield curve. I mean, what do you make of what we've seen as far as reaction?
Yeah, I mean, some of the reading that I've done has kind of showed low probability of the federal government being able to kind of really enforce a firing of a Fed official. But I don't know. I mean, I'm Sam. Unfortunately, I'm not a legal expert, but just telling you what I've kind of seen come across the headlines. I think what's interesting, though, is what you called out is the continued steepening of the yield curve. Because kind of what that says is, look, there's more at play than just whether or not the Fed is going to cut rates in September. Remember, the Fed controls the short end of the curve. What is leading to that steepening on the back end? Well, a few things, right? It's inflation is really bottomed out and is maybe kind of curling back up. Deficits, and then trade policy. So all three of those, whether or not you pull somebody off the Fed governor list, that doesn't really control that back end of the curve.
Yeah, I mean, whatever comes out of what we're hearing as far as the firing of Lisa Cook, et cetera, and what the Fed might be responding to right now as we speak. I mean, the fact is, to your point, I mean, we've seen the 2-year coming down, the 30-year going up, that's steepening, and whatever happens in September, moving past that, you've still got these sort of long-term inflation expectations sort of baked in, and no doubt investors very much assessing the premium that they deserve on that, because of the fact that there are these worries about, the debt, the fiscal situation, and as you mentioned, some of the tariffs as well. So I'm just wondering, what your read on that is.
I mean, you hit the nail on the head. Investors are demanding more, right? They're demanding more yield for taking on that longer term risk, and that's what yield premium's all about, right? Is this idea that if you want me to extend the duration and extend the risk that I'm holding in this bond portfolio, you're going to have to you're going to have to pay me more for that. And I think that's kind of what we're seeing in this market. Now, what's interesting about this, and what I've really found over the last couple of weeks has been interesting is this rotation, right? Because we're at least we're finding some middle ground with some of the back end rates. I mean, basically the 10-year has kind of been stuck between 4.25 and 4.3. So a lot of the volatility has come out of the back end rates. As that's happened, what have we seen, Sam? We've seen people kind of move more into some of the cyclical names. Big winners last week. We've seen it, with the small caps. I mean, the Russell's up basically 10% since the beginning of August. So, we're starting to see more and more of that rotation trade. All it's going to take, though, is if you start to see kind of that back end of the yield curve starting to get back up over 4.3, 4.4, 4.5, approaching that area again, then it's going to be the real true test of whether or not that cyclical trade holds firm, or whether you start to see the rotation back into the mega caps. And one of the things that I've been kind of following and personally for myself from a trading standpoint is just kind of looking at hedging activity on the mega caps, something that we hadn't really talked about in a long time, but you're starting to see a lot of puts getting purchased, a lot of that skew getting more and more bid for some of those mega caps as they've been rolling over a little bit. And that's just kind of the rotation that you're seeing overall in the market.
Yeah, it's fascinating you mentioned that sort of sweet spot as far as those rates are concerned, particularly with regards to the correlation in equities. And, to your point, with regards also to that rotation that we've seen. I mean, I've seen in your notes, so you have pointed out, I mean, the Russell is up nearly 10% month to date. But, as you've also highlighted, we have seen this story before, and it's ultimately failed. I mean, are there any other, sort of moving parts that could help continue to put the wind in the sails of that rotation? I mean, rates aside, because, the other story, I suppose, is the broadening out of the AI trade, and I suppose that all comes down to, what we're likely to hear also from NVDA tomorrow.
Yeah, no, I mean, having a Wednesday announcement with NVIDIA right smack dab in the middle of the week will really set the tone for the end of the week. But don't forget, Sam, we also have PCE coming out on Friday. We've got non-farm payrolls a week from Friday. So there's a lot of information that could be market moving. But I think the NVIDIA one, as you mentioned, is pretty important because when you look at the April 8th, April 9th bottom, and you see that NVIDIA basically doubled its value since it put that, $85 a print in to where we're at right now, more than doubled, actually. It has rallied on this belief that there's continued spending and that's going to continue. And that, as we've seen with some of the other mega caps, they did not show much of a slowdown in terms of their AI demand spend or their CapEx. But it really all comes down to NVIDIA. They've had mixed news recently. I mean, you kind of have to look at that in terms of kind of what's come out of China, what they're doing in terms of their revenue share with the government, the 15% revenue share on the H20 chips. It hasn't been the greatest of news, but the stock continues to rally into what is almost an all-time high within a couple dollars away. So yeah, it's a pretty important print tomorrow.
Yeah, no doubt about it. And particularly when you look at sort of that data center metric as well, particularly if, you've got to have more infrastructure to power all of that, whether, that could act as a catalyst for a little bit more sort of broadening out when you talk about utilities, et cetera. But I'm very pleased to say we're just going to have Kathy Jones join the conversation, Chief Fixed Income Strategist at Schwab Center for Financial Research. Thanks for joining us, Kathy. Joe and I have just been talking about that steepening yield curve as far as some of the reaction to what we're seeing with respect to Trump v. the Fed. But I do want to get your thoughts on something else that Joe touched on. We're obviously going to be getting more information before that September rate decision, I should say. PCE, next cab off the rank. And do you see any constraints to the prevailing cutting bias that we're seeing in the markets right now, given that we have some more economic updates before that?
Well, there's always a risk that the Fed could change its tune between now and the next meeting. But I think it would really have to come down to the labor market reports rather than the inflation reports. We already know inflation's too high above the Fed's target, and yet they're signaling that there's room to cut based on weakness in the labor market. So the important reports are going to be those that talk about the labor market, that give us evidence of further softening there. I think we'll get that. We are penciling in a rate cut in September and likely another one in December because the evidence is that hiring has really slowed down significantly, and we're actually starting to see layoffs pick up. So likely to see verifying data there, but it's not going to be the inflation data. It's going to be the labor market data.
Okay, well, after the PCE, all eyes on that jobs data, which we'll be getting out next week. Short but sweet, Kathy, thanks so much for joining us. Kathy Jones, Schwab Center for Financial Research, and my thanks also to Joe Mazzola, Charles Schwab Co.